Just continue our next panel. It's a pleasure to have three really accomplished panelists with me. We'll be talking about XaaS, everything as a service. Is that a game changer for the financial industry? And what does that really mean when we look at core businesses and business models? So I guess what we learned throughout the panels we had today is that the financial ecosystem really is rapidly growing. And we've also seen a growing tendency of specialization along the value chain. So fintechs are more than just good-looking UX and good-looking front end. And so solutions for infrastructure and for core IT are becoming more and more important. So the question really is, what core competencies do I need today if I want to start a business in the financial or in the insurance industry? And are we really moving to an XaaS era in banking, in insurance, in finance? And if yes, what does that really mean for us and for the players in the market? And the question really is to build or not to build. And that's the question I'd like to discuss for the next 40 minutes with my panel. It's Katharina, Chris, and Wolf. It's a pleasure to have you here, even though we can't connect directly. I hope we'll have a thrilling discussion. Let me just, for you as the audience, give you a quick introduction of who these people are before we directly dive into the questions. Let's start with our female panelist, Katharina Gera. She's the co-founder of Immutable Insights. Immutable Insights is a really innovative German startup that delivers 100% reliable insights on blockchain in real time for traders, for investors, and is looking at a new era of advanced compliance. Besides that, she's an active early stage investor. She is a Capital Magazine 40 Under 40 talent and is a nominated expert on all topics related to the blockchain for parliamentary hearings at the German Bundestag. So thank you, Katharina, for being with us today. Our next panelist is Chris Bartz. He is the CEO and co-founder of L&VAR, and it's also a special pleasure to have him here as he's also really involved with our Bitkom activities. He's our very own head of a working group on fintechs and digital banking. He advocates a strong ecosystem for fintechs and for digital banking and really wants to build sustainable partnership with impact. One role where he's doing that besides our engagement within the Bitkom is at the FinTech Rat of the German Federal Ministry of Finance, where he is the chairman. Chris, thanks for being here with us today.
Pleasure to be here.
And our last speaker is Dr. Wolf Graulich. He is a partner at Senecor, and he is also very involved with our Bitkom activities. He is the chairman of a working group on digital insurance and insurtechs. And his aim in his work is really to connect the insurance world and the IT topics when it comes to value creation. Previously, he headed the digital insurer Element for around 3.5 years and now is a partner at the IT service provider Senecor Technologies since 2020, where he's working on further expanding their insurance business. Thank you, Wolf, for being here.
My pleasure.
And having made these quick introductions, I would also, before we dive into the topic, encourage our audience to ask questions, to really engage in the dialogue. I guess that's a unique chance to really ask questions to the other speakers, to also engage among the audience. So really, if you have any question, if there's anything you would like to know, please feel free to use our chat on the right-hand side of your screen. And yeah, having said that, I guess one first question is to build or to buy. So when we look at the changing ecosystem, what are the core competencies that should remain within a bank, that should remain within a company, and what can maybe be outsourced in today's business world? Chris, would you like to start?
Happy to do so. From my perspective, the answer is actually not one which is true for everyone, but rather it should be a very individual decision, because from my perspective, it really comes down to core competencies. So whatever player you are, be it a private bank, be it a wealth manager, be it a discretionary portfolio manager, be it a retail bank, you should really ask yourself, where are you better than everybody else? And wherever you see your clear competency and core competency, that's where you should invest to expand this core competency. Because in the end, digitalization is primarily about understanding who is really best at what in what competency, having access to these competencies, and then connecting them in order to create the best value generation for the final client. So you should focus on where are you really extraordinarily good. And then you should ask yourself, okay, what are complementary services? Be it on the technology side, be it special functions, And then the goal should always be to create the biggest value for your client by combining your own core competency with the most complementary services from other partners. So per default, you could pretty much outsource everything and then say, okay, all the technology is from someone else because my own core competency is more on the relationship side. Or it might be that you are really strong in a very specialized service, and then you combine this service with other competencies from others. A very simple picture most of you can relate to is actually when you think about the smartphone and you think about applications. The question is, are you the one providing a certain application? Are you the one who provides the platform where all of the applications are combined? Both roles can be very attractive. You should really ask yourselves, where are you better than everybody else?
Thanks a lot, Chris. Let's hand over to Wolf. What's the thing you're best at? And do you agree to the statement that basically everything can be outsourced if that's not part of your core competency?
Yes, I'm sure that in principle, that's it. And it's interesting that Chris is mentioning that, because looking at the insurance industry as one example, they were coming from exactly the opposite direction. In the good old times, as an insurance company, you wanted to make everything yourself. And now, obviously, that has softened up. And probably the general notion at the moment is that you want to control, if not build and own everything that's at the customer interface, because obviously that has a lot to do with brand awareness as well as with the new platform ecosystems that are emerging now. But even that is softening up, because as Chris mentioned, sometimes you want to also stay competitive, and that means enlisting best-in-class offers. And if those offers are built by someone else, then you really have to ask yourself, you may, for example, want to use Next or not. But certainly an insurance company or a bank would not want to reinvent the wheel by building something as sophisticated themselves. So it all burns down to a very complicated decision-making, which also, I believe, historically, insurance companies don't have a lot of practice at. Making cold-blooded make-buy decisions is something that you need in order to do what Chris just hinted at, really say, I want to control the customer front end if I'm a brand company, and I want to really concentrate on what distinguishes me from the competition. And everything else is up for grabs if I can control the complexity in getting service providers, also as a service providers that we're discussing today, to help me with that.
Thanks a lot, Katharina. You work in the blockchain industry, in the blockchain ecosystem, which does not have such a strong history of let's build everything we can, such as the insurance industry. So what's your stance on the question, buy or build?
Well, listening to the other two, Chris and Wolf, I'd actually say I'm probably taking a completely different angle to this, because to me, it isn't make or buy. The first question that I would be asking is if it's centralized or decentralized and which protocol you're using. And then I think the whole, setup becomes different. Listening also to the other two, I think one of the aspects that we shouldn't forget is in the end, it's all about the market dynamic. That if you compare the different systems and the global offerings, I think right now we're still quite domestic. And the whole regulation, although we talk a lot about level playing field, I think, most of us would agree that the level playing field is quite bumpy. But in the end, if you look about global infrastructures, and if you, take a small sneak preview into the token economy, something that I am so very passionate about, then I think the whole question really becomes different, because in the end, that, enforces or enables, you could say, a level of scale and a level of standardization that is going to be hard to compete with other business models. So I think the blockchain technology could play quite could play a big role and change quite a bit of those parameters.
Thanks a lot. You mentioned the topic of regulation. I guess that's a topic you're all very passionate about. I'll come to that later, maybe before we dive into the nitty-gritty details of regulation in the ecosystem. Maybe a more general question. So when looking at outsourcing different ideas and maybe focusing on what the core competencies of your own business models are. We talk a lot about agility, a lot about speed, a lot about being the best in the market. So what are maybe disadvantages that come with these decisions to outsource certain parts of your business model, and maybe also related to your own company and your own XaaS business model or approach you're taking within your companies. Maybe Wolf, you want to start?
Well, I mean, obviously, we are the ones advising people on how they should build up their architecture and their tech stack in order to meet their business goals. So our own company obviously has a different take on that. But I would say that in general, you can look at it and say, I want to get services, as I mentioned earlier, where you have best-in-class solutions, where you don't want to reinvent the wheel. And in the meeting before, we had my former company Element in the meeting, who were also, even though they were a tech-oriented startup company that also wants to show investors what they're capable of when it comes to their IT stack, they were from the first day, we were in the situation of making decisions of what we wanted to build proprietarily ourselves, and where also we as a tech startup had to or wanted to re-enlist the help of others. So you can nicely see that even if you're a tech company, whatever that attribute is, decisions on where you want to put your money and your resources, which are always scarce, especially when it comes to skill resources in startups, you have to make very, very careful decisions where you build yourself and where you simply say, nah, I'd rather get something from the market. And that general notion, I think we're going to discuss later, has a lot of implications on the banking industry and the insurance industry when we're looking at it with the eyes of an incumbent.
Chris, is there anything you'd like to add?
Yeah, I think especially in the financial industry, so as some might know, I'm in this industry for quite a while now, so more than 25 years, as we just in our pre-discussion, unfortunately, reflected on when Wolf and I discovered that we have quite something in common when it comes to location. So his son is going to the same school I went to. But when I look over the last the development of the industry, at the beginning of the 2000s, you had this trend of profit centers and creating internal competition and the idea of buying things in the market, driving outsourcing and so on. But in fact, you actually saw that this was not something which the companies really followed on, because they were not asking themselves if they are really, really good on something. They created profit centers, but in the end, there was no competition. And per default, you were still buying within the group. And the group was still selling within the group. And you always ask yourself whether you want to open up, for example, your best resources to some competitors. When you compare that to the approach of Amazon, when they created AWS and the famous Bezos mandate was written, and really at the core of the foundation and the core of the whole architecture, there was this notion of connectivity and making sure every single service they create needs to be able to be connectable to anybody else, and therefore per default needs to be able to be used by anyone else. And then also following through with this, and for example, being the architecture and allowing a direct competitor using AWS, meaning, for example, Netflix running on AWS, and Netflix definitely is a competitor of Amazon Prime. So this really following through with the idea of offering your services to the market and focusing on connectivity and focusing on core competencies and marketing these core competencies to whoever is willing to pay for it. And on the other side, also being willing to buy from whoever is the best is something not many companies are really willing to follow through with. Instead, especially in our industry, you often see that people talk about outsourcing, talk about focusing on core competencies, and then in fact ending up designing everything to stick basically with the old model, just with a different organization around it. And I think that's a mistake we should all learn from. And we should ask ourselves, okay, are we really, really good in what we are doing? Or should we actually change the approach and go for someone else so that we can focus our resources? And there I would fully agree with Wolf, that we can focus our resources on the points where we can really make a difference. Because again, digitalization will make this even more transparent, and more clients, be it B2C or B2B, will be inclined to go for the best solution. And it becomes easier to go for the best solution. And I think that's also linked to Katharina's field of expert, and she's a much, much better expert there when it really comes to blockchain technology. But for me, this is also a next level of providing an infrastructure which allows different players to conduct in an easy way around different business models. So it's even another example of a field where you need to focus on things where you can really make a difference in order to be relevant and to be used by others.
Yeah, thanks a lot. Katharina, from your side, as you're more focusing on the blockchain perspective, but can maybe also comment on like the broader ecosystem we have. What's your position of, are we making use of this idea of really using everything as a service, of really focusing on the core competencies each company has? Are we making good use of it? And are we making that to a relevant extent, or is there more we can do, and what could be potentially done?
I actually would like to change my hat for this particular question, because as a supervisory board member of one of the oldest private banks, we've actually just asked ourselves that question and asked the board that question, and went through a quite thorough screening on, what really is a business model in private banking today, but most importantly, what is the current client need, and is there a segment of clients that may be, overlooked by most of the other more standardized banks. And if you want to go in a niche, and if you want to, get an edge to people that right now are underserved, then really you need to become flexible, and you need to have, let's say, a menu for the client to choose from, and then, build something that it isn't, just quite the same as everybody else. Because I think one of the things is that if you try to do everything in-house, you end up with a focus and prioritization, and then you lose the ends. And there is room in the long tail, and people have specific needs. There are different family setups, there are different professional setups, inheritances. There's so many different types of clients, and if you go with a standardized model, you'll lose some of them. And I think that is also an opportunity for businesses that go with a software as a service model, because you can plug and play. If you have the tech savviness in-house, I think that's a big driver for all of those. Who is doing those purchasing decisions in the first place? Do they know their do they know their stuff? Right? So I think that's really something oftentimes is overlooked. And the other thing is, in the end, let's not forget the business needs to make money, right? So how do you build a compelling offering that is a good value proposition, but also, will remain competitive in an area where you have, discount offerings in the trading side, discount offerings on the wealth management side, and robo-advisors and all these things. So, it's a challenge to build something that's unique and still will find its market.
Yeah, thanks a lot. I see there was a lot of nodding and smiling from Chris and Wolf. So I guess we all agree on like the main points you just raised. So obviously it's a lot of decisions that need to be made inside a company, what to focus on, how to collaborate, how to make best use of the competencies we have. But as we in our previous panels also looked at the customer, which in the end is kind of the end user of products and of the companies. Coming from a consumer perspective, it's the question of what's in it for me if I don't see all the fancy technology in the back end, if I don't see all these decisions that are being made, if I'm not even aware of what's been outsourced and what's a core competency. So from the customer perspective, what's the main benefit and main advantage if we focus on this XaaS idea?
I personally think Katharina just made a very, very valid point. It's exactly in this field. So when you think about the customer, over the last years, a lot of focus from providers was actually on designing a nice front end. But that in itself makes the user experience nicer, but not necessarily better, because you don't broaden the field of solutions you can provide or the services you can provide. By focusing on your infrastructure, focusing on your connectivity and your capability to connect to different services and broaden your offering, and being more focused that you really can offer whatever the client wants and your client group really needs, you obviously enhance the value you create for the client. And I think that's like the core benefit. And for me, again, coming back to the simple example of the smartphone, if Apple would have focused on they build all the services on the smartphone themselves, pretty sure there would have been still a lot of services, but I would absolutely bet all my money that there would never be the same broadness and offering we experience today, and the same possibility to really adapt the smartphone we all use to whatever preferences we might have. I don't think that every player should go for the same logic than Apple, because obviously it depends on your field and your offer, the market you are in and your client groups. But the possibility to really to connect to different services and then say, okay, for my particular group, for my particular niche market, this is what I need. This is where I make the difference. Be it that I'm the curator helping my clients finding the right services, be it that I'm really good in one particular service and then I look at what are the additional things which are complementary to what I do and enhance the service I provide. So, for example, if I'm really, really good in portfolio management, it might be that I focus on things like additional ESG information, helping my client to make better decisions, stuff like this. So there's a broad range of potential use cases, but it's always coming down to using your own connectivity and to enhance basically the value you create for your client by giving him a better fit of services and ideally the perfect solution in an individualized way. And maybe last sentence in this regard, I think for far too long, digitalization was associated with standardization. So basically everybody gets the same. Online banking is all looking the same. When in fact for successful tech players, digitalization is all about individualization. So combining different things differently depending on the respective client need. And that's something banks have to invest in and have to invest to be able to do that. And that's in the end a back-end play. And really, it's again about connectivity and being able to combine different services.
Maybe something to add from yourself, Wolf, looking at this standardization versus individualization and this shift towards a more individualized solution from the insurance industry. What's your stance on how to face the customer and how the customer might potentially benefit from all these things to find an individual solution in insurances?
Yeah, I mean, I was nodding to Katharina because in the insurance industry, it went through pretty much the same stages as Chris was just describing in his last statement. I mean, decomplexification, of course, is something that is always to be sought, but that went to an extent also with the help of technology, where you totally lost sight of the different types of customers that were still within your focus and that you wanted to serve. And I think modern technology, also with services in mind and with our subject of discussion, XaaS, helps you to get individualization and addressing customers with their specific needs, not only when it comes to product, but also when it comes to interaction that you cannot handle by yourselves. So I would say that a lot of services that a good company enlists from third-party providers, a consumer doesn't and shouldn't be aware of. The less of it he sees, the better. But in the end, we should use technology and service providers of that kind in order to address our customer scope that we strategically put into our focus in the best possible way. And that means handling complexity, but also good XaaS providers and partners help you handle that complexity.
Thanks a lot. Yeah, handling complexity, I guess, was a good wording to come to our next set of questions, which is, I guess, Katharina was it just mentioned at the beginning. Looking at regulation, I guess that's a topic that can be discussed on each of our panels because it's really highly sensitive and everyone has kind of their own perspective on how to regulate, what should be regulated, what might potentially be deregulated. And before we dive really into the details of regulation, maybe just if you could quickly, in a couple of sentences, each of you summarize how the ideal ecosystem for each of your fields might look like, because after that we'll go into how regulation might help to create these ideal ecosystems. And maybe Katharina, let's start with you and your perspective from the blockchain world.
Yeah, I mean, if you ask, a blockchain aficionado what he or she thinks about ecosystem, then the answer is really the platform or the protocol, right? And then as a second step, the interoperability between different protocols so that you can create a holistic offering. So when Chris was, making his smartphone example with Apple, then I'm known for comparing Ethereum blockchain to the Apple smartphone because they actually done that. So everybody can launch a token just like you can launch an app. So there is the whole creativity and eagerness and drive of any token provider out there in this world, and they can use this as a platform and technically as an ecosystem. So I think what we've seen in decentralized finance over the past 15 months was astonishing. I think that here. We've just published a report with the World Economic Forum on the DeFi Policymaker Toolkit. I think we need to understand that regulation certainly does not become easier. And it also, becomes more complex and more interdependent. So I think it's a very, thorough discussion to be had, because there are no quick fixes, and whoever promises that is, probably not understanding the breadth of the problem.
Chris, would you like to add to that from your perspective?
Yeah, first of all, I would completely agree that regulation not necessarily becomes easier. And I think it's really important that regulators get for themselves that it's not about protecting what is there, but rather adapting what was going to come. Historically, regulation was all about focusing on individual institutions and their responsibility for certain services and certain things. And in the future, also the regulation is much more about understanding the value chain, understanding responsibilities within the value chain, understanding really connection points and who is responsible before one and after one. So what is the handover? Who is responsible for the infrastructure? Who is responsible for certain services running on the infrastructure? And I personally think one driver in order to really make this possible is going to be that regulators start using technology and understanding technology as an opportunity for themselves. So meaning that they themselves think and say, okay, how can we connect ourselves better to the ecosystem so that, for example, we understand business and we understand what is happening in a very transparent, up-to-date, maybe even real-time way by being connected and using APIs ourselves. So that then the regulator really says, okay, if that works for us, then let's see how this is actually happening across the ecosystem and how we need to adapt rules in order to be really up to date and support an ecosystem instead of a single institution.
Can I actually comment on that?
Sure.
Sorry. No, because that was a prime example. I couldn't have actually said that better, because one of the things that we also say is, if you look at that, tech is really the one lever that you have to make it more efficient and effective, also as a regulator, because you come from I'm too late to the party anytime and every time, I actually can enforce it in real time and much more efficiently. And I think that is a big leap forward. We do that with anti-money laundering prevention, and you can actually detect money laundering while it's happening. So you take away the fundamentals of why people do it in the first place. So I think that's one of the prime examples, and there are many, many others out there. So if we could, put a tech stack layer to the regulatory discussions, and also, most of the burdens that we see, is it KYC, have the whole identity question and others that produce a lot of cost, a lot of nuisance with the clients as well. So I think that's really something where we can only just embrace the discussion and make sure that we apply technology to also having a more effective and efficient regulation.
Yeah, thanks a lot. Wolf, I also saw you nodded here and there from your perspective, looking at the insurance ecosystem. Is there anything to add? I guess we covered some broad topics.
Well, I would actually come with an antithesis, because I'm not that optimistic, at least not for the current time when it comes to insurance regulation. I think BaFin, and I also witnessed that in many discussions, was perfectly aware that the advent of fintechs and insurtechs, and also the emergence of cloud-based ecosystems and service providers spelled certain complexity coming up. But I think they are still very much in fear that, let's say, insurance carriers will not be able to handle that self-made complexity of lots of service providers in a deconstructed and reconstructed value chain. And I think also they themselves think that they are not ready to handle that. And this is why I am very much along Chris and Katharina, that midterm, they have to see the opportunities that this technology-based services also provide to regulatory transparency. But I fear that, as many in the insurance industry themselves, also the regulator sometimes goes to bed and kind of like wishes that things were as they were and that it doesn't go as fast as they fear. So there is a lot of convincing and working to be done on both fronts, I think.
Yeah, thanks for also sharing maybe not so quite optimistic perspective, because I guess that's what really keeps the discussion going. And one of our earlier panels, we also talked about regulation and what does it mean, and if it to some extent maybe is an obstacle. So maybe a somewhat provocative question is, do you think that the current regulations really avoid a modern IT infrastructure? And is the regulation really currently an obstacle, as it's not as speedy as the progress in the market and in these ecosystems is? Maybe Wolf, we'll start with you.
I wouldn't think so. I think the general philosophy and the way that European regulation approaches banking and insurance is not wrong from the base, and I think it's up to the task of also handling disruption and technological advancements. But sometimes I sometimes feel the insurance industry is also being their own obstacle, because they have to face, like the regulator has to face the brutal facts that that without using and utilizing that technology, competitiveness will sometimes fail. And I'm not wanting to open up a big political discussion, and I will see if Chris and Katharina agree or disagree. But we all know that European insurance and banking regulation sometimes plays out very, very, very differently from one European country to the other. And at the same time, no regulator and certainly no European economy will really prohibit cross-border banking services, especially deconstructed banking services, and cross-border end customer insurance policies. And there are one or two instances where I think that together with the market participants, the regulator will need to move, because otherwise we may fall behind in one or the other business model as a German location for banking and insurance carriers.
Yeah, let's see if Katharina and Chris agree. Katharina?
Thank you. Well, you made a very valuable point, and that's, I usually say, we're just really subscale at anything, and also in regulation. So, if you do easy math and you say, simplified, we have 7 billion people on this planet, and we have, 500 billion in Europe, and you're already counting every bits and pieces of it, and another, 500 million euro in North America, then you have 1 billion out of 7 billion. And I think what people are mostly missing is the extreme dynamic in which also, in particular in Southeast Asia, banking as a service with mobile first, a younger generation, more digital native, and all these things, more gamified, evolved. And yes, of course, big parts are also commercial banking. There are other, markets, but the European banks are structurally unprofitable for too many years now. There is no cash, there is no innovation. And the big banks are not going to be the model of the future, but still most of the regulation is focused on it. And still BaFin is funded mostly by those big banks. And I think we have a structural massive problem, both on the business model and the market side, on the regulatory side from the frameworks, but also on the level of complexity and the number of, also competing. If you look at the, KGB and then on the KVG and all these different things, it's become an almost unbearable challenge to do the right thing. And that's really just what I want as an entrepreneur and as a business person. I just want to know what the rules of the game, and I want not to, pay hundreds and thousands of euros to any law firm to tell me what I can actually do. And I think that is one of the big structural problems that we have as well. So I think we need to make a type of regulation that actually, doesn't provide all the people that just hedge their backs, but actually take a decision and also bring a business forward.
Chris, would you like to add to that?
I agree with quite a lot of what was just said. I think from my perspective, for too many people, the main incentive is basically that nothing changed, and that's a significant risk. And sometimes I like to compare the overall situation with the industrialization roughly 200 years ago. So when you look at China back then, they had roughly a third of the global GDP. So their incentive was basically nothing should change. And when you look at industrialization, then a few, roughly 1 century later, so from our point out, 1940s, 1950s, China was down to a single-digit GDP, not because anything changed in their country, but it changed for the rest of the world. And at the moment, Europe in particular seems to have the same strategy in the sense of, okay, we don't change and everything is great as it is. While the rest of the world has a significant growth dynamic and dynamic of change. And we need to be careful that we don't end up with the same situation, starting from a very, very strong position, but being reluctant to change because we're used to things as they are. Indeed, I think digitalization in general has a lot of comparison to industrialization. Therefore, we need to adapt. And the financial industry is like a very good example because finance is so much so connected to basically everything else. So there's pretty much nothing happening in the economy without a direct impact to finance. And therefore, whatever we do in fintech and whatever we do in financial regulation has a direct impact on how the overall economy works. Blockchain, a very good example. I mean, at some point we have to agree on how does a machine-to-machine contract work, and the discussion can start with, okay, what is a good infrastructure for tokenization? It can start about, okay, how do I do actually payment? But in the end, it's also about how do I change the overall regulation and the overall legal setup. And we need decision makers who are willing to take the risk and to create a vision that people support this and do not only protect the status quo.
Thanks a lot for this outlook. And if we look at the clock, the time is running. So maybe for the last couple of minutes, we have, let's try to take a look at the future and try to see where we are in around 10 years, even though I know that's always a hard question, especially in such a dynamic market, in such a dynamic ecosystem. But do you think in like 10 years, in 2030, is this idea of everything as a service and this idea of having a more connected fintech, insurance, blockchain ecosystem and world, is that the future? Or where will we be in maybe 10 years? What's your vision for that? And Wolf, maybe let's start with your perspective.
Well, I think when it comes to interconnectivity and platform ecosystems, in the previous meeting, it's not going to be the one big everything thing, at least in Europe, I don't believe in it, but interconnectivity, platform ecosystems that address customer needs in a more holistic way will be common day things in 10 years in Germany and Europe. I'm pretty much convinced about that. Is it all going to be then nice and partnery, and there's going to be service providers who are happy, and there's going to be brand providers and custom owners who are happy? I think there's going to be a lot of friction and there's going to be a lot of ugly competition around it. But I think technology, and I mean that in a positive way, has evolved to a point where this interconnectivity and this service orientation and this focusing on your own strength and core brand properties is so far advanced that this will simply be the way that also European economy goes, also in the financial services.
Thanks a lot. Your vision for 2030, Katharina?
Well, that too is one that I can answer with the token economy. I think that we'll be using tokens as much as we'll be using email, or that we are using email today. And I think that will be very much one of the standards of our future. So I'm actually looking forward to that, less complexity and more value time.
Thanks a lot. And last but not least, Chris, your perspective on 2030 and how the ecosystem might look like.
I think we will have many more players than we have today, because I think we will see many more niche players, be it on the customer side, focusing clients in a very, very specialized way, client groups, certain regions, whatever the setup will be across different channels, online and on-site. And also a lot of players for very specialized services, be it like a special investment expertise or be it a special service around this. And then we will have some kind of layers connecting all of this. That might be a different infrastructure. When we think about something like blockchain, it might be platforms connecting and bringing expertise together from different fields. But I think in total, we will see more players and a lot of potential for individualization, so that really people can use it in a much, much more individualized way compared to today.
Thanks a lot. That was a good closing summary, and I already see that Kevin, our next moderator, just entered the stage. Thanks a lot to Katharina, to Wolf, and to the panel for really sharing your insights and sharing your discussion.